Carnival shares sliding on the day despite better than expected earnings results and upbeat guidance as travel companies benefit from pent-up demand. Joining us now is Carnival CEO, President, and Chief Climate Officer Josh Weinstein. Josh, it's great to see you. Thanks so much for being here. So a very strong quarter, revenue doubling from a year ago, customer deposits hitting a record. You raised your outlook, yet the stock sinking today. And I think a lot of the investors out there are questioning how much more room there is to run. What's your message to them?
Oh, my message is we've just scratched the surface. So first, thank you for having me. I can tell you that we ended our second quarter, as you said, in a pretty strong way. We set records. I mean, the one word I could use to describe it is record. It was record yields, record revenue for the second quarter, record customer deposit levels. And here's the future stat for you. So typically in our industry, we have a wave period of bookings, and the wave period, which is our peak booking period, is the first quarter of the year. What happened with us? Well, what happened with us is we started our wave period in the fourth quarter with a Black Friday event that just literally started with a bang. Our first quarter, the traditional wave period, did set a record. And that was great until the second quarter, where we beat the first quarter. And that is truly unprecedented. And in the first 3 weeks of June of our third quarter, it hasn't slowed down. And so the fact is that demand is real. And I would actually say at this point, I don't look at it for our business, for our brands of world-class brands, a portfolio of world-class brands, as real pent-up demand because they hadn't been able to cruise at this point. This is just demand. This is just people wanting experiences, looking for great value, looking for great brands, and they're finding us.
Josh, let's talk about per diems, up 7.5% in the quarter. You're now forecasting growth of 5.5% to 6.5% above the 2019 levels for this year. How much higher can that go?
So our expectation is, we set some targets for ourselves, 3-year targets that'll get us out to 2026. And we expect a good amount of run up in yield. Now, clearly, we've still got some occupancy to make up when you think about our annualized occupancy levels. And so we'd expect to get back to full historical levels next year, which is going to be a nice jump in revenue. But on the per diem side, on top of that, we expect low to mid single digit per diem increases over the next several years. And we think we can achieve that.
Josh, there's lots of focus on getting back to profitability. Your balance sheet, yes, does look a lot better to where you were when you compare to those peak debt levels here. But what's your largest obstacle, your biggest challenge when you're trying to get back, when you're trying to get to profitability?
From our profitability for the third quarter, we'll be profitable in the third quarter, and that's a turning point for us, just like hitting positive yields was a turning point in this second quarter. And we're looking forward to 2024 and beyond, where profitability is not going to be the question mark hanging over the industry. We are showing incredible progress every single quarter. We are just making leaps and bounds. I think, for us, it's a long-term game, and we want to see that progress every single quarter, and that's what we're delivering, and that's what we expect to keep delivering every quarter. And that's the mandate internally, and that's what we're focused on.
Josh, whenever we talk about cruises, we tend to bring up the demographics, right? We know who the loyal customers are. Some would call them boomers, but you've obviously got a number of brands out there that are trying to bring a newer, younger demographic into the fold. How do you do that? And what specifically, or how specifically are you targeting them?
So because we have a portfolio, we've got brands that are really catering to different segments, different demographics. We've got Carnival Cruise Line. It is America's cruise line. It caters to younger people, to folks in their 20s who are single looking to go for a quick holiday with their friends, to families with young kids looking for a cost-effective way to have an amazing family experience. And so we've got brands that can really do that. Now, our focus, we have truly, despite the strength of our brands, despite being number 1 or 2 in every single major cruise market in the world, we have not done a good enough job of getting even higher awareness and consideration of our brands because we simply haven't been spending nearly enough in advertising, which has been a change of approach since I joined about 9 months ago in this role. And you can see that paying off. And I'll give you a great example. In the first quarter of this year to the second quarter of this year, the number of repeat cruisers that our brands carried stayed the same. It was great. It's a solid level, and it stayed the same. We went up in total number of passengers carried by about 13%. That entire growth in passengers was from new to brand and new to cruise. So our message is getting out there, and it's really starting to resonate with, as you said, a broad audience, indeed.
Josh, demand certainly has been strong, but what about risk of recession? If we do see one, what's the impact?
You know, we're in a very good position when it comes to thinking about what's the impact of a recession on our business. You know, at any one time, we're about 50% booked for the entire year. And now we're getting better and better at getting people to spend their onboard experiences beforehand, too. So even that, we're getting more visibility and getting it quicker. On top of that, you know, I hate to say this, but, you know, I do say it. We are an outrageous value to land, anywhere from 25 to 50% less expensive to come on one of our ships than a comparable vacation, whether it's a theme park, a city break, whatever it might be. That is outrageous. Now, the good news for us is in a time of a recession, that value gap shines through. And as people are thinking about how do I spend my hard-earned money to make my vacation work, because that's one of the last things that they're going to give up. And that's where the value proposition really shines. You know, we've got a strategy with our leading brands around the world. We've got about 75% of our capacity of our ships. They are positioned where our source markets are, where our Americans are for our North American brands, Germany, the United Kingdom, et cetera. By being able to do that, we take a lot of cost out of the equation when people are thinking about their holiday with us versus alternatives.
Mm-hmm. Well, your momentum certainly being reflected in the numbers. Josh Weinstein, Carnival CEO, President, and Chief Climate Officer. Good to talk to you today.
Thank you very much for having me.